All right, good evening, traders. Today is September 19th, 2023. This is the free room, the hit and run candlesticks free room. And we have a Tuesday night webinar every Tuesday, and we pick a topic and we talk about a topic. Well, tonight was my night, all right? Next Monday will probably be next Tuesday night at 8 p.m. will probably be Doug's night. And the weekend after that, the week after that will probably be Rick's night. So we're going to get this thing started here. We're going to talk about limiting risk. So let's start off with a disclaimer, all right? Trading involves significant financial risk, okay? It's not suitable for everyone. No communication from us or anyone affiliated or with hit and run candlesticks is intended for educational purposes only. You're advised to attest any new approach. In other words, do your own due diligence prior to implementing it. Past performance does not guarantee future results. Got to get that out of the way. All right, so here's my email address. Now, I am super friendly. If you're not a member of BYOB, you can email me. I have a YouTube channel, and you can reach me on any one of my videos. Just leave a comment down below. But here's my email address if you're ever interested in asking a question. You might have a question you forgot to ask tonight. You can jot this down or take a snippet of it, and you can feel free to email me. I'm here to help traders. I like helping traders be profitable. And here's my YouTube channel. It is youtube.com/@b-your-own_boss. AKA BYOB Trading. And that's what my YouTube page looks like. And I put out videos I make one at 8 o'clock every morning, and it's called the Morning Market Conditions and Analysis. And then I make one at about between 3:30 and 4:30, and it's called the Market Wrap Up. And I put that out in the evening. So if you want to do me a favor, you want to click on those and see if there's a video you like, give it a thumbs up. If you like the channel, please subscribe. All right, let's talk about limiting risk, all right? First, we're going to start out with limiting risk is, knowing when to shut down a trade, okay? The best skill you could ever learn or hope to learn as a trader is just knowing when and where to shut down a losing trade. At what point is this trade no longer doing what you expected it to do, what you wanted it to do? And at that point, you got to be willing to shut it down. Not double down, but shut it down. Okay? You don't want it to. This thing could run away from you if you keep doubling down. I've seen days where the market just goes up and up and up and up, and for 6 hours it goes straight up, and people are doubling down on their shorts all the way up, and they wind up blowing up their account. The same thing when it goes down. It goes down and down and down some more, and then down some more than that. And they double down every hour, and they find out that now they're in way over their head with position size. So the best skill you could ever learn is knowing when and where this trade is just not working out, and you got to shut it down. Okay, so that right there. Trading, let me say this. Trading has a 97% failure rate. All right? You need discipline. You need to know when it's just not the right time to be trading. You need to know when you don't have an edge. A 97% failure rate, that's huge. It takes a highly disciplined trader to be successful in this market. All right? More traders fail by not shutting down losing trades and blowing up their trading accounts than any other reason. It's not like lack of time. No, it's they didn't shut down losing trades. That's what it comes down to. The other best skills. Move with the trend. All right? Don't fight the trend. Move in the same direction as the money flow. And if you want to figure out like which way the money's flowing, I like to take 2 of my anchored VWAPs. I put one on the high of this year for the SPY. And then I put one on the pullback low from that high of this year. If price is moving toward, let's say it's under it, and it's moving toward those 2 anchored VWAPs, then money is flowing into the market. If those prices moving up and away and over those 2 anchored VWAPs, then money is flowing into the market. If price is moving below and away, further down, then money is coming out of the market. And that's a great way to figure out, is money moving in or is money getting moved out? All right, so there's a great way right there to figure out if money's coming in or money's coming out. All right, let's talk about strategies to limit risk. All right, well, the first one is obvious. All right, smaller position size. All right. All right, if you got 1,000 shares at risk, well, you're going to have a whole lot less at risk if you just trade 100. Or you're going to have a whole lot less than that at risk if you just trade 10. Trading has now become almost commission free. I'm pretty sure it is. I don't know where you're trading. I'm assuming it's free, but it might not be. But it's almost free. There's a lot of institutions out there that offer almost free trading as long as it is, well, as long as it's stocks. If it becomes indices and options, there's a charge for options, but smaller position size. So if it's not going to cost you in a commission, why not trade small and trade often? It's just an idea to think about. Smaller size equals less risk. Another one, tight stop loss. Now, I got, good and bad to say about this, okay? You get your stop loss too tight, and what happens? You just wind up losing that stop loss over and over and over, right? Everybody knows this, right? So you got to put your stop loss at a reasonable spot. Usually I like to put it underneath the last reversal area on a 30-minute chart. All right, so wherever the last reversal area is, like if I'm going long, I like to find the last 30-minute reversal area where price has now removed, is trading in an upward direction. That's what I like to do. But tight stop loss is one way of limiting risk. Next one, follow the trend. All right, if you're trading against the tide and you're just putting more and more money into this position that's just getting buried by the price action, you're putting more and more at risk. So the best strategy is it's much easier to flow with the trend. Follow the trend. Follow the money. All right? If money's moving in, you're going long. If money's moving out, then you're going short, okay? You're going to follow the direction of the money flow. And that's just common sense. All right? It's a whole lot easier to go in with the flow of the river, or the river of money. It's easier to move with whatever direction it's headed off into. Another strategy to limit risk, I call it the early hedge. All right, if I like, let's say I like Intel. Let's say I like Intel long. Let's say I see Intel pulled back to the quadrant line's midpoint, and I would like to go long, but it came in hard and fast. So I decide, well, I'm going to go long on Intel with $34 calls, you know, with a 70 delta, and I'm going to sell out of the money $39 calls to hedge it early. That's called the early hedge. It's at the same time you buy the long calls, you're selling the out of the money long calls at the same time. I call that the early hedge. Then comes the late hedge. All right, so now let's say you bought those $33 calls long and price moved from $36 up to $38 before closing time. Okay, now I want to lock in my gains, so now I place an out of the money sell order for the $39 calls. I want to lock in my profits. In other words, now if price goes down, those $39 calls that I sold, if price opens up the next morning and goes back to 35, those 39 that I sold will make money while my other calls deteriorate in price, and it oftentimes hedges and protects the profit that I had. So I call that the late hedge. Another way of looking at the late hedge is you're in big. You knew you had an MMRP and it was going down, and you want to lock that in, and you've got, I don't know, let's say you've got 50 puts and they're way in the money because that MMRP play really worked today, but it's closing time. You're not ready to give up those puts yet. All right, so what you do is you sell some out of the money puts to lock in a lot of that gain. All right, so that, and it reduces your exposure overnight. Now, will they both have some theta decay? Yes, but it's going to limit in case the market decides, well, we're going to bounce on this uptrend line and we're going all the way back to 450 to the other side of the downtrend line. All right, that's a way of limiting risk. It's called the late hedge. You've got so much short, and what you're going to do is you're going to buy some longs in order to offset so that you're not at risk overnight. I call it the late hedge. You do that usually about 3:30, 4 o'clock, just about the time the market's making its last move. Another way to limit risk. Let's trade long over areas of known support, okay? If we trade long just under resistance, aren't we putting ourselves at risk? Wouldn't you agree that if we trade short right at a place where sellers are known to show up multiple times, and we go and we're going to go long at the same place that sellers have been known to short that area or to show up and just start selling the bejesus out of that product, okay? Let's go long in areas over areas of known support. It's just a whole lot easier if we trade long over the areas of known support. And then we're not working against the sellers on our long trades. We're working with the buyers of our support area. Same thing with the shorts. Let's short under the areas of known resistance. Let's work with the sellers. You know the sellers show up here all the time. That's where I want to short because I've seen it time and time again. We've seen this where there's resistance, overhead resistance, and price goes up, and what happens? Sellers come in and knock it right back down. It happens over and over. Some of those areas of known resistance can be downtrend lines. That would be known as diagonal resistance. And some of them can be horizontal resistance, where you see an area, 450. We know SPY sells off at 450 every time it gets up there. That would be a known area of resistance. That'd be a straight number. And then sometimes there's a diagonal. There's a trend line developing, and you know that sellers show up every time that trend line is reached, or buyers show up every time that uptrend line is reached. Waiting for confirmation. If we're going to go long over support, let's wait for the green candle to show up, right? If we're going to go short at the resistance area, let's wait for the red candle to show up. Show us that the sellers are still there and they're still engaged and they're still willing to sell it. All right? Show us that the buyers are waiting at the support line and they're willing to jump in and start buying it up as it comes into the support area. Show us that at the midpoint we want to see buyers show up and start buying it up at the midpoint of our quad lines. Okay, using our trend lines, that's when we connect two highs or two lows together. It's a form of diagonal support and resistance. Using our trend lines as known areas of support and resistance. All right, so you've got an uptrend. That is a form of diagonal support. You've got a downtrend. That is a form of diagonal resistance on your chart instead of being just horizontal. Okay, strategies to limit risk. Hey, how about we stand aside and have a risk-off situation during times of high volatility? Now, wouldn't it make sense? FOMC is going to come out, and we already know CPI is creeping up, and FOMC is just going to make a statement at 2 o'clock tomorrow. Do we really want to be loaded into products or have a high amount of risk on during an FOMC announcement? Over the long weekend, do we really want to have a whole lot of risk on during times of high volatility? War breaks out. Do we really want to have a whole lot of risk on during times of high volatility? So when these economic numbers come out, or when you see, Apple's going to report tonight, or Google's going to report, or Tesla's going to report tonight, okay? All these big boys, these big market cap stocks, they can twist the market up and get it moving in another direction just on some flaky news, all right? So when you see they have earnings, or you know that they're going to have an investors conference, or they're going to roll out their new products and share them with the public. You're going to get a whole lot of commentary on it. How about let's take risk off during times of high volatility? It just makes sense. All right. How about we trade when we have an edge? All right. You see a choppy market. We know it's choppy. Why are we trading a choppy market? We have no edge. That's why we don't pick. We don't pick bottoms. We don't pick tops because we're not very good at it. So we like to trade when we have a trend. It's much easier to fall into the river of money flowing in the northern direction than it is to try and pick the top or pick the bottom. It's much easier to find that stock where you can see money flowing into it because it just consistently just keeps making higher highs, and it just keeps bouncing higher off of minor support. Comes back down, it hits minor support, and within 2 weeks it's taken out the most recent high. And that's what we want to do. We want to pick products where we have an edge. Picking a product when we have no edge only leads to more risk. How about we use our quadrant lines to confirm bullish and bearish price control? If we've got a pullback and the pullback remains on the upper quadrants, quadrant 3 and quadrant 4, I call those the two top ones, 3 and 4, and price remains up there, I would tend to believe my bias is that the bulls are still in control of the price. And it's the same if we have a downtrend and the bears hold the price down into quadrant 1 and quadrant 2. I have to believe, and I have a bias, that the bears still are controlling the price action. Third, let's lose small. All right, this is my losses and gains for, I don't know, probably 2 days ago. I traded these 4 products, and what I like to do is limit how much I win or lose. So I'm losing small. I have losses. You're all going to experience losses. You're all going to experience some wins. All right. The trick is to have control, is to shut it down when it's not working. There's a spot where I say, hey, this is no longer working. And that's what I'm looking for, is that spot where price is no longer working. So now I'm going to pick up a few charts. And let me see if I can escape from this. And I'm having trouble, but let's just do this. And we'll pick up a few charts. And if you scroll up, if you scroll all the way up to, on the minutes, it would be 7:50 p.m. I provided you with a market maker's reversal pattern video. And believe it or not, we are in a market maker's pattern right now. And I'm going to share that with you so that you can see it. And now I'm going to go to the hourly chart. Actually, I'm going to go to the 2-hour chart so you can see where it's at. All right. And then I'm going to go to the daily chart right here. All right. So here's our daily chart. A market maker's reversal. I call it the market maker's reversal because price was moving up and then price action changed direction. You see how this red candle traded from all the way from up here. It gapped down. It actually gapped down under the whole candle, even the tail, and started trading down. So this is what I call an igniting candle. This one ignited to the downside. So this one ignited down, and then it paused, and then it checked support. It checked resistance. And for resistance, I have what I call the anchored VWAP. Now this anchored VWAP is anchored right over here at the pullback low from this year's high right here. This is where it's anchored at. And if you see, this is the daily candle. And if I zoom in here on a 15-minute chart and I follow it all the way back, you can see price action came down, it paused, and then it checked resistance. This would be the anchored VWAP. It could not break over the anchored VWAP. Now VWAP is considered the place, it's the average price that shares sell for. All right, that's the average price that shares are traded for. Now, if the average price is moving down, then I have a bias that money's coming out of the market. Right? If the average price that shares sell for is coming down and it's under VWAP, then at that point, money's coming out of the market. If price is coming down to the VWAP, money's coming out of the market. If price is moving up to VWAP, money's moving in. If price is moving up and away from these two anchored VWAPs, then money is flowing into the market at this time. All right? So what we had was money came up and it bounced and it did an H pattern rollover. So here's a H pattern. It came down and then it rolled up and over right there. So there's SPY. It hit the anchored VWAP and then rolled down to test the uptrend line. And where's the uptrend line? Right there. How do I get that uptrend line? Right here. All I do is connect this low and then extend it into the future. And this was my target for today. Everybody in the room knew that my target was going to be this uptrend line. I had it circled. As soon as price reversed, if you can see the bull 180 where price turned around and started moving in the other direction, all the way through, we had a 3/8 cross on our 10-minute chart right there. We had a 3/8 cross. It happened under VWAP, and then price started to trade up and away from VWAP and continued to move higher as we went into the close. So here's price, came down. It was moving away from VWAP to the downside, and now it moved up back through it and came back and went to produce a higher high, but it failed. Now yesterday, okay, we failed to make the higher high. When price fails to make the higher high, it is my bias that the bears will be under pressure to produce the lower low. Will they do it? Not all the time, but there will be pressure on the bears to produce the lower low. Now keep in mind, why didn't price make the higher high? Was there not enough buyers? Was it overwhelmed with sellers? You have to ask yourself, why didn't price make the higher high? Is nobody interested at this time? So it's showing you price fails to make the higher high. So my bias becomes I give the credit to the bears as having control as price moves away from VWAP to the downside and came all the way into this uptrend line. Now see this uptrend line? That's a form of diagonal support, okay? What happened here? At this point right there, price came down and buyers showed up and bought it up to here. What happened here? At this point, price came down and buyers showed up and pushed price up to here. Okay? Now price comes back down and we extend this line to the same area and buyers showed up and pushed price up to here. Now the question is, will the buyers have the ability to produce the higher high? They might not. It might take them days to produce a higher high. They might only be able to produce a small high and then a higher low that just barely exceeds this one. And then the following day they might make another higher high that exceeds this one, but still does not exceed this one over here. And then they have another higher low, which will exceed the higher low that's already been made. Not by much, just by a little bit, and they will continue to grind it up to the upside. That's what we're looking for the bulls to do. For the bears, we want to see them push it back down through this uptrend line and break it. That's what the bears want to do. Okay? So this is one way. So what I trade a 10-minute setup. Okay? And I trade when the 3, that's my yellow line, when my 3 on my 10-minute chart, it's always on a 10-minute chart. When my 3 crosses under the 8 EMA, that's the white line. When 3 crosses under, I'm looking, and it happens underneath VWAP, I like to go short, okay? Because that's telling me that price is now got a high probability of running away from VWAP to the downside. Whenever I see price, the 3 EMA, cross over the 8 EMA on the 10-minute chart. All right, that's what I'm looking for. Let me share that with you so you guys can see it. All right, so just so you know, this is my BYOB 10-minute setup. Step 1, I find market direction. How do we do that? We look at those 2 anchored VWAPs. Is price moving toward it or is price moving away from it? Okay, if you're underneath it and price is moving toward the 2 anchored VWAPs, then money's moving in. That's bullish. If you're underneath it and price is moving away from those 2 anchored VWAPs, then price is bearish. Money's coming out of the market. So I like to trade in the same direction as the market. I have more success trading with the direction of the market than trying to fight the tide. All right? Step 2, find a weaker stock, strong stock that fits my trading plan. In other words, I don't trade $1,000 stocks because my account's not big enough to trade $1,000 stocks. I trade a stock that I can buy and that I know if I can get it to move a buck, I can make, $200 or $300 off of that trade in that day. All right. So I want a stock for me. For me, this is what I like. I like stocks that trade over 1.5 million shares on average every day. Okay, I like 2.5 million shares or more. I don't want to be stuck in a stock that only trades 100,000 or 50,000 shares for the day. I want to be able to get in. I want to be able to get out. And I want plenty of liquidity, and I need a market maker that's going to keep that spread tight. Hopefully it's going to be a penny wide or less than a penny wide. That's what I'm looking for. All right? What else do I like to trade? Stocks between the range of 20 and 100. I like those the best. Those $60 to $100 stocks, they tend to move a nice dollar move, especially XOM, CBX. Some of those stocks move a nice dollar in one day. If I can nail the bottom or get the 3/8 cross, I can make, a quick couple $100 off of it. All right. So on a 10-minute chart, I trade when the 3 EMA crosses over or under. All right. So I'm going to trade bullishly if the market's bullish and the 3 EMA on the 10-minute chart crosses on top and over the 8 EMA. All right. And I need all of that to happen over VWAP. All right. Because I want to see price is now running away from VWAP. In other words, and the only way to get price to move away from VWAP is institutions have to hit the ask button. All right. They just have to hit it over and over and over. Whatever the ask price is, institutions have to hit it over and over and over just in order to bring the price of that product up in order to get it to run away from VWAP. And it's the same with downtrends, all right? Institutions have to hit the bid, and they just keep hitting the bid, knocking the price down over and over and over. You and I, we can't do it. But what I want to see is institutions step in and just start hitting the bid and selling it and selling it and selling it and just keep knocking it down, because that's gonna get me interested in going bearish when I start seeing a trend of institutions just hitting the bid. All right. So I use under for bearish markets and I use over for bullish markets on the market day. Right, so I'm looking for that 3 EMA cross. All right, I like to manage those trades on a 15-minute chart, and I use that 3 EMA. When the 3 EMA crosses back over the 8, all right, that's when I want to exit. All right, it's a trader's choice. If those two have not crossed by the end of the trading day, it's your choice whether you want to hold a full, partial, or any position overnight. Again, if you decide to hold overnight, keep in mind you may want to hedge. And this would be a late hedge. If in the evening you have, I don't know, a certain amount of shares long on Intel because you picked it up off of the midpoint, and you decide, well, you know what? I think I will sell some SMH calls, or I will buy some SMH puts, or I will sell some Intel calls that are out of the money just in case price decides to go further south. That would be a late hedge. All right, step 5, keep it simple, don't complicate it. Step 6 is if the 3 crosses over VWAP, but it happens under VWAP, 3 crosses over the 8, and the cross happens, the bullish cross happens or occurs under VWAP, I have to wait, all right, for a bullish candle to show up. I want a clean candle over VWAP. I want it to have no wicks, tails, or bodies attached to VWAP. And then the second caveat is it can't be a reversal candle. It can't be a doji. It can't be a topping tail. I don't want any candle that says the sign of reversal is imminent. In other words, I don't want to start off with a red candle that's coming down. I want to see a green candle. All right, I want to buy into a bullish behavior. And it's the same way with selling. I want to see a red candle. I want to move with the market. I want to see sellers showing up and selling it. So I want to sell into a red candle. That way I know it's currently being sold, and that gives me the courage to enter into it. So this is my 10-minute BYOB setup. I'll put that in the chat, and you can copy it down, and you can use it if you like. Now I'm going to take questions. Does anybody have some questions on the MMRP, the 10-minute setup, or anything I discussed this evening, or if you even got a stock you want me to look at? Thanks, Phil. You want to look at Tesla, all right, and SMCI. Thanks, Mike. Let's go here Tesla first. All right, I like to go to the daily first. Okay, Elmer. All right, you can see Tesla has put in a higher low. Here's the point of origin, and it moved up, and then it traded back. So let's just see how far it traded back, okay, Elmer? So here's me using our quadrant lines for Elmer, and this is a learning and training exercise. All right, this is the low. This is the consolidation low right here. Notice price moved up from the 100 mark and then moved up to the 200 mark and failed to break the 200 mark and just consolidated, well, for the month, half of February all the way over to halfway through May. You see that? Can everybody agree on that? See the consolidation that happened there? So I'm going to take the consolidation low and measure up to the high. That's how I use the quadrant lines. All right, so here's the move up. Okay, now Elmer, we got 4 quadrants. Quadrant 1, quadrant 2, quadrant 3, and quadrant 4. All right, it's not a test. Okay, work with me here. All right, notice price is over the midpoint. Would you qualify the bulls have control or the bears have control? Bulls. I'm gonna say you said bulls, all right? So there you go. So bulls. I would have the same bias. The bulls have control. Now we've got our trend indicator, which is our 17 EMA. And what do we have? We have price is above our 17-day trend indicator right there. Notice the price action, the 3, the price, and the 8 all over the trend indicator. Okay? Are we getting a 3-day pullback? Yes, we did have one. Well, this will be a 2-day pullback. All right? So on these last 2 days, we made a lower high and a lower low and a lower high and a lower low, but we still remained over the trend indicator. That's bullish. Now, I like to believe that when stocks move up, I like to see them move up, come back, and test minor support. So we're going to go through here, and I'm going to just pencil in some lines of minor support. So minor support, once we move up over this consolidation, it's only 4 days of consolidation, right over here becomes minor support. Okay, so price moves up through the resistance and comes back, and now this is going to be minor support and comes back, notice, and then it tests minor support. Tests it once, twice, can't make a lower low, and then does what? Runs off and makes a new high. That's bullish behavior, big time. Now, as it breaks through the resistance, this new consolidation area becomes the new minor support. So I put in another line. I'm going to show you how to read stocks and read charts. All right? So now this becomes minor support. Price moves up, fails to make a higher high. Well, it made just a squeaky high right there. Comes back, and I don't know if that tail came down there and hit this tail, but I think it did. I think these two connected. I'll bet they did. And there would be minor support again. And you can see, now you want, what we want to see, Elmer, is price, after hitting the minor support, begin to move up and away from minor support, producing another higher high. All right? So that's bullish. That's what we want to see. Price action move up and away after tapping minor support or kissing it right here. All right? Now, we're underneath the all-time high, or this high over here. I'm going to take this out, zoom out. So here's our most recent high, and price is doing exactly what we want it to do. So this is bullish. Until this trend breaks, it's bullish. Right through there. All right? Notice this would be diagonal support. Okay, you can see all I'm doing is connecting the two lows. This low and this low. And you can see, not sure how low that got. It actually does touch. If you look at it, oh my gosh, it just kissed it ever so slightly like a butterfly and then took off after kissing it. That's crazy right there. So here it touched. So if you had the inclination to connect this low and this low, you could have been watching this low right here as it came into price and watch for that butterfly kiss and the confirmation on the 10-minute chart. And here we have it. Price comes in, kisses the uptrend right through there, or the support line. I don't know why, but that tail looks longer than that in the other picture on the daily. When I zoom into this, it shows the tail coming all the way down. Something freaky's going on. Maybe that was maybe after hours or pre-market hours. Not sure. But irregardless, let's go to our 10-minute chart. Okay? And now we got price moving up and away from VWAP. So that's bullish right there. It's bullish till it's not. All right? It's doing everything we want it to do, Elmer. All right? It's moved up and over VWAP, tried to cross back under. Obviously, buyers said no, that's the end of the selling, no more selling. And they started buying it up, and it produced a run away from VWAP up there. And then, so we've got a higher low. This was our low. Another higher low, and another higher low. And now we've got another higher low. As long as this continues to make higher highs and higher lows, I would like to stick with it to the upside. So Tesla, I'm very bullish on. All right. Where did the 190 price line occur? 190 price line. This is my quad lines, David. Right here. All I did on this, David, okay, was I took the consolidation low and the high, the most recent high this year, and I measured from the consolidation low to the most recent high. And you watch, see where price pulled back right to the midpoint, and the bulls stepped in and said what? Not today, not tomorrow. All right? We have control of this. So it only lasted one day. Little doji candle, it paused, and then bulls stepped in right there and started pushing it back up over the midpoint. So the 190 is nothing but the quadrant line. Okay? If I remove this, there's no line. Just using my quadrants right there. Okay? You're welcome, Elmer. Thank you. Thank you for being here. Mike wants to view SMCI. I like that one. All right, so here's the low. There's the high. It's quadrant lines. Okay. I'm going to have to say that the bears have a little bit more control right now. And I'm looking at a double failure at the midpoint to produce higher high right there. And I'm looking at a double bottom as well. So it's just kind of consolidating in a range under the midpoint, Mike. All right. And we'll take this, put it up here, and take this and put it down here. Okay, so let's use all of our knowledge. Okay, sellers have showed up here, here, and here. Buyers have showed up here, here, and here. Okay, so sellers showed up 3 times here, buyers showed up 3 times here. Okay, so this is consolidating. All right, it's currently in a downtrend. This is a bear flag. Okay, it's a move down and then a move to the right. Okay, I'm going to take that off. Start using my arrows. This is a move down and then a move to the right. All right, the longer it stays in this move to the right, the more likely that the next move is down. All right, that's the most likely move. Doesn't mean that that's going to happen. But you can see right now, we've got the 3 underneath the 8, and all 3 of the price action here is underneath the trend indicator right there. Okay, so the most likely move is to the downside. Now, it's been tested 3 times on the top, 3 times on the bottom. Now notice, it's coming back into support right now, all right? Now, you can choose to play it. Now, when I'm here, I don't play this with a full position. Why? Because I'm playing right into support. If I was to short this, I would not short it with a full position. I would short it with a full position back here or at the midpoint. That's just the way that I play it. You have to follow your trading plan. But for me, I'm not going to play a full position right here. If it goes through and then comes back and tests it, and then price is held underneath this new resistance line, that's when I'll put on the full position with confirmation. In other words, I want to see the red candle start to sell away from this resistance line right then and there. I'll be looking for the 10-minute setup. In other words, I'll be looking for the 10-minute cross on the 10-minute chart. I'll be looking for that price to move down under VWAP and start to race away to the downside. That's what I like. Down here, shorting it down here, I only put on, I say, Mike, like 1/10 or 2/10 of a position. I don't want to go full boat because the chances of it bouncing and flying back up are great. It's shown me that it does it time and time before. I'm not willing to take my chances on that. So I'm not going to take a full boat here. Will I trade it? Sometimes I will if it's in a downtrend that looks like it's going to break. But I do it with only 1/10 or 1 or 2/10 of a position right down here. Now after it breaks, comes back, and the structure holds this resistance, and then I get a red candle underneath VWAP on the 10, then I can hit it with a full position. All right, does that make sense? You're welcome. All right, moving back up. All right. And Carrie says on 10-minute charts, where are my anchors for my VWAPs? Absolutely, Carrie. All right. I'm going to go through it right now. All right. If you have TC2000, this tool right here says A, and it looks like a little anchor. That's what you can use. It says A VWAP right there. All right. Okay, my 2 anchors. I've got a green and a blue, Carrie. Okay, my green one is anchored off of this year's all-time high. All right, and when was that made? That was on 7/27. Okay, write this down. 7/27, the all-time high for SPY for this year. All right, I've got one anchored there. The other one, all right, is anchored at the pullback low made on 8/18. All right, write this down so you can duplicate it on your chart, and then you're going to know when money is moving into the market or away from the market, and you'll know what direction to trade in the morning. All right, so at 8/18 there is a low of that day. That's where the other one is anchored, and you can see the two of them come together right here, and they create a $2 spread between the two. In between, when price is in between, I consider that chop. It's undecided. It's undecided. When price moves up and over, bulls are in charge. When price moves under the both of them, the bears are in charge. All right? Does that help you, Carrie? You're welcome. All right, I'm going to move back up and see if I can see the next one. Don says KSS short. Not sure if it's a question, but I'm going to look at it. Maybe he has it short. Yeah, KSS is short. Let's go to the daily. All right, so let's just zoom out just a little bit, okay? Who asked that one? That was Dawn. All right. So, Dawn, I like to look at all the possibilities, all right? So I have a low here and a low here. So I'm going to connect them because usually the third time price connects with that low, it usually bounces. And I can show you, if you go back to the SPY and you look at the bounces, it was on every third bounce, price action bounced the third time it hit that trend line. All right? It's a pretty common occurrence. On the third touch, you can pretty much count on a bounce. But you wait for the confirmation. You don't guess it. You don't anticipate it. You're just watching it, and you're looking for that price reversal. So this is how close you are to a possible support structure bounce. It's at $18. Actually, it's at $17.38 right there. And your price is currently at $21.84. Now, it's up to you if you want to dig out those last $3 and hope that it breaks trend there. And it looks like it can move it up just a tad, a smidge more right there. Let's see what we got now. Yeah, that looks a little bit closer. A little bit closer right there. All right, now we're touching. Okay, so where are we at? 1868. So you've got about $3 left there if you want it to the downside. And you can see price is moving down. It's running away from the trend indicator there. There's a good chance this is going to come down and smack this right here. And I'll bet that that's what it's going to do. I'm not going to say for certain, but you do have some consolidation right through here. Okay. See that consolidation right there? See that battery of candles that just held price up there? Whenever I see that, I like to put a candle right on top. Because something, notice this has been a place of support. See how price came down and bounced price? And then you see once price came up and came back and hit it, it went up. So you're right here, right on another support structure. Right there. So if you break underneath that, it's a good chance you're coming to the trend line. It's up to you whether you want to play that. But this is weak. This is weak. We've got lower high from this high. It's a higher high from this high. Okay, so it comes down, makes a lower high, makes a lower low. Now it makes an equal high, makes a higher low, makes a higher high, and now we're right back at the same low. Now, it could bounce here, it could bounce here. But this is weak. If we look at the quad lines, right through here, you can see where the price action is. The bears have control right there. You see that? See that, Don? Everything's underneath the midpoint. Everything's underneath the 17 EMA. But you're right into support right there, okay? You're coming right into it. You got some there and some there. You got some diagonal support and you got some horizontal support. And they're coming together right there. All right? So this is weak. This is down for me. Does that make sense? And we'll take that as a yes, because that's the last thing I see you wrote. All right, and Don said that. Elmer said yepper. Kevin wants to know. Kevin just put out Sophie short. Not sure if he's got Sophie short. If he wants to know to short it, you got a kind of a head and shoulders pattern here, Kevin. Head, making the right shoulder now. Here's your left shoulder, looking like a neckline through here. All right. So right underneath this $8 mark looks like a head and shoulders break. Notice price came down. See over here the consolidation high. See this consolidation high? Price came into the consolidation high and bounced up once, twice, right there. That was minor support and price bounced up from it. Then price came back to it and bounced again. All right. So once it breaks this low right here of this consolidation area, it's short because it'll be the head and shoulders pattern. Okay, so it went up. So you notice price moved up, made a new high, and then it consolidated. So here's the new consolidation high and the new consolidation low. When we break the consolidation low, that would be the major support. Then price is moving down, and it's not till it starts moving back up again and starts a new uptrend. But this is weak. This is climactic there. If we look at this with the quad lines in there, you can see that from the low to the high, you're stuck in quadrant 1. There's no way you want to be bullish until price starts to maneuver up and over this midpoint right here. It's got to get up over that midpoint for me to be bullish on it. And I would be more inclined to look for it to break support right here. All right? So I'm not bullish on this, but I'm not bearish either. All right, does that make sense? I'm not bullish, but I'm not bearish. This is still in an uptrend. Believe it or not, as much as, even though the trend indicator's red, okay, and we made a low, it's still an equal low. It's not a lower low and a lower high yet. All right? If it comes back down through there, that will be a lower low. That will be the first lower high if it comes back to the $8 mark. That'll be the first lower high. And then you'll look for it to break the $8 mark, and the head and shoulders patterns is triggered right at the neckline. Okay, does that make sense? Can I show the anchored VWAP again? Yes. coming back to it. Here's SPY. All right. I'm on the daily chart. All right. Trader R. All right. I've got one anchored here. That date is 7/27. All right. And that's my green line. And then I've got one at the pullback low. That date is 8/18. All right, and that's the blue line. And you can see they both come up to this area right here. I'll zoom out. You can see this is both of them right here. Right here and right here. All right, when price is moving towards those two lines from below, money is moving in. When price is moving away from those two lines that are above, money's coming out. Now, believe me, money can be moving in for a short period of time and then move out for a long period of time. Or money could move in and bring it all the way up over here and then be bullish again. We'll see what happens. Okay. I want to just hit the MMRP that I didn't get to explain earlier on the SPY. So just give me a second. I'm going to show it to you just a moment here. There's the daily chart. Here's the igniting move down. There's the pause check of resistance. I think I did show it to you. Here's the first price advancement candle. I'm only looking for 2 more price advancement candles. Okay? Okay, here's the reversal igniting bar to the downside. Price was moving up and price turned on a dime. The pause. They're stunned. They're in awe. Now they check resistance. Resistance holds. Now, price begins to make a lower low and a lower high. Next candle, lower high, lower low. All we ask of the next 2 candles is that they make lower lows and lower highs as well. And this one's got to make a lower low. That's got to be lower than this low. So it's going to be all the way down past 440. And the lower high has to be well underneath this high right here. Not well under, but it's got to be underneath this high right here. So we're looking for another candle making a lower low and a lower high. And then one more after that, also doing the same thing. A lower low and a lower high. All right, that's the MMRP pattern for the SPY on the daily chart. I'm going to go back up. And Kevin wants to see Sophie. I think I went over Sophie. Yeah, I said it's not bullish or bearish. It's kind of just stuck in here right now. Yeah. DraftKings and Rivian long. Rivian, I like Rivian long. I'm already in it. Okay, Rivian. Here's the quad lines. It's the pullback. It was moving up. It got slammed down here at the midpoint. I like this move up right here. It just got a bad day yesterday. Look for this. Look for this trend to hold, hopefully. We'll see what happens. I like it. You might want to wait until it gets up over the midpoint. I'm currently long it. All right? And why am I long it? I'm long because if you look at the pullback low, it's right here at the midpoint. So here's the move up. Here's the pullback to the midpoint. So for me, the bulls are in charge of this price action still so far. All right? As far as the pullback goes, if you want to wait for the price action to get up over this midpoint of the pullback before getting bullish on it, I understand. But I'm bullish based on this right here. All right? So far, we have a downtrend that's been broken right through here. And we haven't put in, this could be the high. This could be the higher low. We'll see what happens. but I'm long Rivian, and I like Rivian long. Right there. See, price kind of holding in the upper third. That's bullish when it hangs out in the upper third. Quadrant 4 is better, but the upper third is good. And DKNG. I think DKNG is bearish. No, that's not. I'm thinking of Penn National Gaming. All right, so once I see price reverse and I see that this is a bull, I want to see a bull 180 happen off of here. But this is bullish. There's your high, there's your low. Here's price coming back and checking this this area here, the midpoint. It's already checked it once. This is here again. So I want to see price turn around from here and start moving up. All right. If price starts to break this low right here on DKNG, I'm not going to be interested in it long anymore. That's just me. All right. If we break this low right here, this whatever this low is, 29.08. So we start trading underneath 29.08, 29. I'm not interested in it long, because then it's going to actually break the technicals for me if it starts trading below that. Okay. All right, Don. You're welcome. Bulls, Mike's the Bulls, win water. Got that. Devender I on Q. Okay, this is bullish. Now you got consolidation right here. Here's a move up and then price consolidates, okay, Devendra? So let's just mark off the consolidation area. Okay? Here's the consolidation high. Here's the consolidation low. So I mark it off, all right? See where price is at now? It's on support right there. I would like to see this turn around tomorrow morning. Right there on minor support. This is minor support. You got this tail that sticks up there, a candle that sticks up there, another tail that sticks up there, and another candle that sticks up there. And then you got another candle that sticks up there. All of this consolidation is minor support. All right. Now notice it made a higher low, and it just barely inked out, like just for like probably like 10 minutes, the higher high. So I would want to see this turn around right here. If this starts to break below this area, I wouldn't be interested in it anymore below 14. Not to the long side. If it comes down here quickly and spikes this uptrend, and it could do that, all right, and then pops up and away, that's what you're looking for. Just don't let this trend break. And I really wouldn't want it to get below, 1381. Actually, I'm going to say the bottom of this consolidation. I wouldn't want to break the bottom of that consolidation at 1317. Right there, 1320, 1317. Okay, but it's still bullish. This is still bullish. It's made a higher high, and this looks like it could be a higher low. This is still bullish, I on Q. It's pulling back, but it's still bullish. And at Haven, do I use 5-day or 10 time frame or 10-minute chart or 1 or 2 months? I trade off of my 10-minute chart, okay? and I use the moving averages off of the 10-minute chart. When the 3 crosses up over the 8 on the 10-minute chart, and it all happens to get up over VWAP. Notice here's one on IonQ. See the topping tail? Notice the candle is up over VWAP, but yet it's a topping tail candle. See that right there? I don't want to buy that. See that half the 3/4 of that candle is all wick. All right, that shows me that price went up and immediately came back down. That's what I'm talking about, a reversal candle. Okay, notice this one goes up, and then the very next candle is red and comes down. You see that? That's a reversal. Goes up and comes back down. See, that's what I don't want to see. I don't want to be going long when price action is reversing every time it gets up over VWAP. All right, that tells me that sellers are waiting over VWAP, trying to sell it at better than VWAP. All right, so I don't want to be a part of that. I don't want to go long that. That's where I want to go short. I want to go short when the cross happens and price runs down and away from VWAP. For time frames, I go to the daily, all right, to get the big picture at Haven. All right, I want to see the big picture because inside the big picture, there'll be lots of little 10-minute uptrends and downtrends. And I want to form my bias. I want to move in the same direction as the stock is moving, okay? If this stock is consistently making higher highs and higher lows, then I want to be a buyer of a long trade. So I'm going to look for pullbacks that have confirmation on top of minor support, all right, with a green candle, and they're trading back up over VWAP. That's what I'm looking for. I'm looking to have everything in my favor. That's why I was going over limiting your risk. And it all goes to putting things in your favor. I want to go long on top of support with confirmation. I want to go long on top of diagonal support with confirmation. I want to go long over when the quad lines, when price action is above the midpoint of the quad lines and the bulls have control. That's what the whole webinar was about, was showing you places where you want to limit risk. All right, it's showing you places how to limit risk. Number one, put everything, the odds in your favor by picking the bullish stock, picking the uptrend, picking the setup that works for you. And then you can have a 1 candle stop. That's what you want. You want those positions where you have a 1 and a 2 candle stop. Let me just share with you just a couple trades where I took them so you can see where I just showed you what I lost those 2 days, and those were losers. The whole idea is to lose small. So here's one that I took, all right? And I'm going to go in. This is where I bought on the blue dot. And you see the topping tail candle? Big mistake, right? Don't buy a topping tail candle. Right there. Here's VWAP, but I had the clean candle over VWAP here. But the very next candle was a topping tail candle. And what happened? I bought into it and price went down. And I got stopped out. Not a good trade, right? That's just an idea showing you. I bought the topping tail candle and it was wrong. See that? There's your VWAP. There's the clean candle. So I'm buying the next candle, and what happens? It's a topping tail, and price comes all the way back under VWAP. And I said, I'm done. I don't want to sit through the pain any longer. I'm out. Okay, that was APLE. Then I'll show you another one. All right, so here's DFS. All right. So I'm selling short. I got this igniting candle to the downside, and what happens? price pops back up. I got the doji candle right there. See the reversal candle right there? You can barely see it, but there's a red line there. Price reverses and comes back up here. All right, so then I try to sell it short there, and then what happens? Price just keeps working right up on VWAP here. I sold another one there, and I just finally got out with a small loss right there. I said, forget it. This thing's not breaking down. I want to see price break away from VWAP and start selling off. I want to see it start running away from the VWAP. That's what I wanted to see. So at that point, I just kind of like brought my average up and then just got out at a break even, almost, or less. UG, here's another one. Okay, I went long. Here's the VWAP. I can see the launch pad set up. I went long. It went all the way to my target. I didn't take my profit, and I put stops in. You can see price comes all the way back to the same spot I bought it for. All right, and then from there, I just stopped out at break even right there. That's all about losing small. That's it. Okay, so does that make sense, Ad Haven? Dahl wants to know about GE. All right, I'm going to go to GE. All right, here's GE on the daily chart. It's up, consolidating over to the right. It's bullish breakout. It's a big bull flag right there. You're caught in between. Okay, you see this? Look for your clues. This is where price action's telling you clues right here. See all the wicks up there? See how they all stop at the same spot? That means right there, sellers were there. So what you do is you take your support or resistance line and you stick it right on top of that. Right there. Sellers were there. Okay, now we passed through it. Now it's consolidating over to the right. And notice every time it comes down to this line, it bounces up. It bounces up. It comes down, penetrates it, bounces up. Comes back down, bounces up. Comes back down again and bounces up. All right? So where are the sellers now? Look at the wicks again. All right? See the wicks? The wicks are telling you something. All right? This is actually a wick. If you slide these two time frames together, these 2 days together, you'll see that this would be a upward movement and a downward movement producing a wick. Whenever you see this, red, green followed by red, that's a wick. You just have to push it together, okay, to see it. You have to realize that that's actually a wick. Here's another wick. All right, wick, wick, wick. See, they're telling you sellers are right here at 116. All right, can price pass through it? Yes, it can, but they're telling you sellers are there. Okay, this is the place where if you see the red candle and price gets down underneath, trend indicator, you can play this channel back to the downside. But bear in mind, this is a bullish stock. It's not broken. It's still bullish. Keep in mind, this you don't really want to play it to the downside. You really want to catch it and play it off of support. Just like the institutions did here, 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 and here. Think like an institution. You see the institutions come in and they buy it up at this location time and time again. You want to be in the same camp as the institutions, right through there. GE is bullish. It's in a range. It's consolidating right now. All right? The bulls need to break the resistance. The bears need to break the support. Does that make sense? Dahl. You're welcome, Mike. You mentioned trend day. No, I didn't mention trend day in the limit risk section. David P. I mentioned trend day and had 50 puts going into the end of day. I sold out of the money puts. Is this a trend day down? David, there is no trend day to the downside. All the trend day are upsides. Okay, I can only have a trend day to the upside. If you're referring to my trend day example, the trend day pattern only works for the bulls. It doesn't work for the bears. In other words, if the bears are bearish between 11 and noon, it doesn't mean that 9 times out of 10 it's going to be bearish all day. Did that answer your question? You're welcome, everybody. What was in the risk section? Thanks, Phil. In the risk section, for this right here, tell me where to stop. You say stop when I get to the right page, okay? Is it in this? This is it? No. Is that it? Is it in this PowerPoint? Was it in the PowerPoint, David? Yes, okay. You let me know when you see it. Say stop. That's it. That's all of them. That's all my slides. You remember what stock I was talking about, David? Was he talking about SPY? I was talking about SPY, and I had 50 puts. Okay, let's say I got 50. I got you now, David. I understand what you're saying. Yes, I said if I got 50 puts. Okay, let me help you with that. I understand what you said now, and I remember what I said. Okay, so let's say SPY. All right, let's go back to it. Okay, we have an igniting bar at the bad downside. We have the pause candle, and let's say I got 50 puts right here, and I'm holding them overnight. All right. So what I got 50 puts. I don't want to have the risk of it gapping up on me, but I don't want a bull put spread either, because I think that price is going down. So what I'll do is I can do 50 puts, but I can sell, out of the money puts down there. You know what I'm saying? To offset the risk of having the 50 puts long. You understand what I'm saying? Let's say I got 50 puts long because I think I'm going to get another reversal candle. Not another reversal, a price advancement candle tomorrow. All right? Let's say I believe that this is it. They're going to put in another red day to the downside. But I'm not for certain, but I've got 50 puts. So what I'll do is I'll sell some in the money puts, or, out of the money puts. I'll sell the out of the money puts so that I will have something to hedge in case it goes long. Yeah, it started with the trend day. Yeah. But that's the point is I'm going to hedge it by selling some out of the money puts in case it goes long. Now, if it continues to go, all I'm doing is limiting my upside, but I'm also limiting my downside too. You know what I'm saying now? Does that make sense? By selling some and holding it overnight. All right? I'm selling some out of the money puts so that I'm not going to get, in case, what if price does the same thing it did here? You know what I'm saying? It went up here and it just gapped under the whole candle, the wick, the body, the tail, the whole thing. What if that happens tomorrow? Right? I don't want that to happen tomorrow, but it could, because it just happened here. It could just gap right over these two anchored VWAPs and just run all the way back up to the upside. That could happen. It did it before here. So what I would do is I'm selling some out of the money, all right, that I'm limiting my upside. In other words, I'm limiting my profit, but I'm also limiting the damage that it can do if it decides to run like that. You got it now, right? All right, let me go back here. Trend A, Byron on Tesla. You bought some this morning, today at the breakout, 9:35 a.m., but had to endure a painful pullback. Is there something you see that would have kept me from buying it then? Trying to get better at timing at my trades. Okay, let's go look at Tesla. And he bought it 5 minutes. You bought it 5 minutes into the open. Okay. So let me see what it's doing. And you did have a painful pullback. Sorry about that, Byron. That's tough, but you got to have balls of steel to hold through that. And nice hold. That's hard to do. The price rallied up, and then you got this bear reversal right when it crashes through yesterday's close. Right there. That's that you don't want to go. You don't want to go less than that. But of course it did, right through there. I don't know what price you bought at, but if you waited 5 minutes before buying it, you bought it right at the top. And I'm guessing this candle probably started out green. Am I right about that? I'm sure it started out green and then turned red. Am I right about that? Yeah, I am. So it started out green and you jumped on it, and then the only way to stop that is, well, here's one clue, okay? Just be one clue here, all right? And I just went through this with somebody else. You see the tails that stick up there over VWAP? See the tails that stick up? Sellers are there. Okay? Put a resistance candle, resistance line right there. All right? That might help right there. Okay? And the other thing is to wait till, you're not going to like this, wait till 10 o'clock before grabbing your market direction. You know what I'm saying? You're probably like me and you like to play hard and fast. You know what I'm saying? And it's just, when you see something pop, you know you got to jump on it to get it. Okay, so, and you did just like I would have done, jump on it, but it didn't break over this area where sellers were. And sellers were sitting up there and they did this to you right there. But thankful the buyers came in and saved your hiney right there, okay? The only thing you can do is you see this, anytime you see wicks up there, put in a note, sellers up here. I mean, even write it on your chart, you know, sellers right here. So you bought right into resistance, and it was known resistance right there. So there's two things there that came from the webinar that might help you. Don't buy into known resistance. That's number one. Number two, wait for the market direction. Okay? Does that make sense, Byron? Give it time for the Byron. For the market to determine its direction at that time. And if you notice, if you looked at the market, price was moving away from the two anchored VWAPs. At the same time, this was selling off. Yeah. You're welcome. Am I watching AJ? No, I am not. I'm a big time SPY options player. I like to watch the SPY right there. I'm going to scroll back up, see if I missed somebody. And I got Byron, got Carrie, I got Don. Billy wants to know about WW. Weight Watchers. I'm going to go to the daily chart, Billy. That's an uptrend. I can see it there. You got to consult. See this? See this? This is consolidation right here, Billy. All right. You see how it goes up? It moves. It reverses up. And then right from here, from that high, see how it consolidates? Right there. Okay, so then you can take this. These are the consolidation highs. And then mark off the highs and the lows. So this is a bullish move up. It's ever so slightly and tiny, but it is a bullish move up. Consolidates over to the right. And then it breaks out through. And now this becomes the new support. This was resistance. Now this becomes support. So now this is doing the same thing again. It's consolidating over to the right. Now keep in mind, you got sellers. See the tails? You're going to look for the clues. Here's the clues. You see the wicks up here? See the wicks? This is giving you clues that sellers are waiting right there. Okay? There's sellers waiting there. Eventually, the bulls will wear out those sellers and buy up all their shares, and there won't be any more, okay? You're in an uptrend. There's sellers right there. If it pulls back, that would be my opportunity to buy it, like right here at the beginning of the day. As soon as you got a green cross on the 10-minute chart, right there, you've got support. So you're buying on support with a green candle on the 10-minute, and you're watching it go back up here. Okay, so look for the midpoint of this consolidation here and look at the bottom. So you might buy 50% at the midpoint if you get that pullback, if they give you that opportunity one more time, and then the other 50% down here. It's just a strategy, all right? I'm just sharing something that I would do. You do what you want and you do what your plan tells you to do. But do something that makes sense to you, okay? So you get a pullback to the midpoint and you see it hold, that would be an opportunity. Pull back to the support and you see it hold, that would be an opportunity. Up here, Up there, I would try it, but only 1/10 or 2/10 up there. If it takes off and I don't get the full boat, then it takes off. That's all there is to it. The point is, I want to limit my downside, limit your risk. don't go a full bolt right into resistance. That is resistance because you got the wicks up there. They're telling you sellers exist there. So don't go a full bolt right there. Could it break through? Yeah, it sure looks like it will, but they're not going to get a full position out of me. Not till they come back and show me that it holds. And then I get the confirmation candle. That's when I want to nail it with a full position. That makes sense, Billy? Where would I buy a FLR? On the pullback to support right here. See this? See this wick? See this? And this? That's nothing but a reversal candle right there. A pullback to support right there. Okay? Anywhere from here to there. All right? Pull back to there. Look for the green. 10-minute cross over VWAP, or happens under VWAP. Wait for that clean candle over right there. All right? This is consolidation. You see this? Here's your consolidation zone. All right? You see the move up? That's the high that it made. So you mark it off. All right? So there's that. And then you mark this off. Then it consolidated all through here. Right up until there. So where's the highs? See the highs up here? You mark those off. That's going to be your minor support. You want to see price pull back to minor support and give you the bounce. Right there. So you got this peak, and this peak right there. So somewhere in between right here and the top of that wick is minor support. So any pullback through into this zone right there is where I would buy it. Right into there with a green candle confirmation, 10-minute uptrend over VWAP. Okay? That's what I'm looking for. Something that I can have a 1 and 2 candle stop with. Okay? I think I got everybody. I think so. All right? Right. Yes, for protection. Great. All right, everybody. Thanks for being here. Again, we got an open house. My free gift is at minute 7:50 p.m. Thanks, Mike. Good to see you again. And I hope you all join me. We're all open house all this week. Actually, open house in hit and run candlesticks and right way options as well. Bring your questions to me. I like to answer them. It helps my members. No question is too stupid. No question is monotonous or time consuming. Your questions help my members review, and it helps you at the same time. So if you come into my room, bring your questions. I'd love to help you. It helps my members as well. You know what? It even helps me review it. Thanks, Lenny. Thanks. I want to thank everybody for being here. Don't forget to pick up that Market Makers reversal pattern video. And I'll see you all. We got specials. I think Ed posted the specials that we're having. $24.50, and you can get, well, a 30-day trial. I mean, it's a deal you can't beat. All right, I'll see everybody in my room at 8 o'clock tomorrow morning. Thank you, everybody, for showing up. Appreciate it. I'll see you all tomorrow at 8.